Let's take a look at U.S. inflation because that is the one data set to watch out for. We've been telling you about it all through this week, and that is the one data that ran hotter than expected in January, like I mentioned earlier, with the consumer price index rising 3% on a year-on-year basis and 0.5% thereabout on a month-on-month basis, beating forecasts. Core CPI, which excludes food and energy, climbed 3.3% annually and 0.4% monthly, also coming in above estimates. Now, the data, of course, suggests that inflation remains sticky, making a near-term Fed rate cut less likely. So that's the kind of read-through that you're seeing as far as CPI is concerned. Markets, of course, are now debating whether the Fed could even consider a hike instead. So that largely is the kind of handover that you have. And speaking of the Fed then, on the second day of his testimony, you do have Fed Chair Jerome Powell, who reaffirmed that he won't resign if asked by Trump, and stressed that the Fed makes decisions based on the economy, not politics. In fact, he also signaled that policy will stay restrictive for now as inflation is close but not there yet, especially after the CPI print. In fact, Powell also noted that the Fed still has room to shrink its balance sheet and may need to adjust rates if tariffs impact inflation. So that's important commentary coming in from the Fed chair.
All right. In the meantime, U.S. President Donald Trump wrote on social media that interest rates should be reduced. He further said that lowering rates would work in tandem with the upcoming tariff policies, half of which have already been levied and the rest are underway. This comes a day after Fed Chair Jerome Powell said policymakers do not need to be in a hurry to lower rates as they watch progress in inflation.
All right, then moving on. Meanwhile, the U.S. posted a $129 billion budget deficit as far as the month of January is concerned, sharply higher than last year's $22 billion gap. The spike was driven largely by calendar shifts, which pulled $87 billion in February benefits into January, alongside rising costs for Social Security, Medicare, and debt interest. Now, excluding timing effects, the deficit increase was a more modest $21 billion. Treasury officials made no mention of Elon Musk's reported cost-cutting efforts as well.